What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. So I went live last night with Dividend Dave. It was his birthday, and it was his 50th birthday. By the way, happy birthday. And hopefully I will be on his channel going live, and I'm actually going to have my YouTube channel integrated with his program. That way we can go live together. But I really discussed my dividend investing strategy. My 1 to 2 year plan, and there's two sectors that I'm kind of focusing on, and I'm going to explain to you why I've been loading up on these, and it's been paying off big time. These guys are cheap. I already got 400 shares of KeyCorp, as you know, but there's a few other dividend stocks that I'm looking at. One of them I just added because it's time to start loading up in the financial sector. So I'm going to go over my strategy. I'm going to go over the review on the dividend stock that I just am adding and buying tomorrow for M1 Finance. And I'm very excited with this move. And I'm going to explain to you why. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. And let's check this strategy out right. So I'm going to use the S&P 500 real estate, the SRRE, as an example. So this is something that has done pretty well, and then it took a huge nosedive when the pandemic hit. So this is one sector I've really been going after, because if you look at how it's done, it has been very stagnant right here. In April 2021, it really hasn't done well in 2023. So it's right there, okay? You're seeing it right now as a plateau. So I've been really targeting, as you saw in my previous videos, real estate investment trusts. Ones like VC Properties, one like Simon Properties. And I'm going to tell you, if you watch my previous video with Arbor Realty Trust, I loaded up on those guys right around this period. And it has done very well. So looking at the real estate sector, they have not done very well. So I have been very much targeting these guys. They have not improved since the pandemic. Now I'm going to just use this as an example right here. Okay, I'm going to say 1/4/2021. They're right at 228.49. Right now, they're at 228.77. So you see right now something that is not good. Now, if you're older and you're an investor, okay, and you have a retirement account in real estate, you're pissed. Somebody like me who has capitalized in buying in the real estate sector since the pandemic started, I'm loving it. And I'm going to show you some examples of some stocks that I bought that are doing very well. And one of them is Realty Income. They have not really performed that well since the pandemic started. They're still not to where they were in 2020. And their peak at 70.10. So they're still kind of stagnant right here. Again, with the sector of April 1st, 2021, they really haven't improved that much. So looking at that like line, this is something that I've been reinvesting dividends. This is one I've loaded up on, and it's been doing very well for me. Another one that I've been buying is EPR Properties. They have not done well. These are two monthly dividend stocks that I have been buying that have been doing okay. I mean, these guys just have not rebounded since the pandemic. And these guys actually suspended their dividend because they are mostly on entertainment properties. So, you see the pandemic happening, everything closed. They didn't want to spread the bug. So these guys took a big hit. Now, I'll give you two more examples of REITs that I've been targeting a lot since the pandemic started. And another one is innovative industrial properties. They have not done very well since the pandemic. Okay. And right now, with this uncertainty, they blew up in March 2020. I sold these guys for a profit, and then I did a little bit of tax loss harvesting, and I'm back buying them. So these guys have not done well in March. Okay, they haven't really improved. Now, I think it's a little bit of a reality check as well, but you're seeing, as I showed you previously, these guys are at an equilibrium. They've been hiking their dividends. Realty Income has been hiking their dividend, and they're still right there at that line at a plateau, and they have not improved. And that sector has not really improved. So that's one thing that I've been targeting and buying and loading up on. I can't really give VC properties an example. They have not they've just been growing like crazy, price per share. But another one I'm going to reveal to you that has been taking a beating and I've been loading up on as well is Spirit Realty Capital. So these ones I've been buying. They have not improved very well. So right here, I mean, look at this huge nosedive. They were what, in their prime at one point at 53.77, and they're 38.66. This has done well for me. These guys have hiked their dividend. Most of these stocks that I have invested in have hiked their dividends. They have strong portfolios. And I know IIPR is a little bit of a risk, but you're seeing where I'm going with a lot of these. I'll give you one more example. You're seeing where I'm going with these stocks that really have not rebounded in this sector. I'll give you one more. And another one, I'll give you my last example, is the NNN REIT. I've been loading up in these guys, and these guys have done very well with dividend growth, but they just have not really got over that hump. There's that little equilibrium that they just have not improved on. And for example, I'll just give you NNN REIT's dividend history as well as revenue. And again, look at these revenue trends that they've had for the past 5 years, as well as dividend growth, which I'll go over. So 2016, annually millions US dollars. Remember, FFO is more important. 533. 2017, 584. 2018, 622. 2019, 670. 2020, 660. You see a little bit of the pandemic hitting in. 2021, 726. In 2022, 773. So you see this revenue increase, and I'll show you their dividend growth. Their dividend growth has been a little slow, but they're hiking their dividends, and they're cheap right now. And I would still consider less than $50 cheap. So 2012, here's their dividend history, 39 cents. 2012, 40 cents. 2013, 41 cents. 2014, 42 cents. 2015, 44 cents. 2016, 46 cents. 2017, 48 cents. To 50 cents in 2019 to 52 cents, a little stagnant 2020 and 2021, and then 2021 53 cents, and 2022 55 cents. So they have a payout ratio that's decent, 68%. The dividend increases in the last 5 years is 5. Dividend growth in 5 years is 2.36%. So if you bought one share, you made $220 with a 5.08% dividend yield. They're not at their they're not in their prime right now. So this is why, again, a lot of these dividend stocks, especially the real estate sector, I've been targeting. And this is why. So I just wanted to give you some examples. Now I'll go over the next sector. I'm using the S&P 500 financial sector, SFRI, as an example. If you look in the past 5 years, again, these guys have not done too well right here. They have not really recovered since the pandemic. They're still at an equilibrium. So right now it was what, 539.82, and it was 531.27. So these guys have been hit hard, and I've been going after a lot of regional banks, which I'll reveal to you. So KeyCorp's a perfect example of something that has not done well. This is a regional bank sitting at 1018. In the past 5 years, it's done terrible against the S&P. Revenue-wise, it's been fine. They reaffirm their dividend, according to many sources recently. Dividend yield is 8.06%. PE ratio is 5.74. The average volume is 27.23 million. Market cap is 9.52 billion US dollars. Its year range is 854 to 2030. Day range is 970 to 1021. Its previous close was 937. So you're already seeing the trends. They have not done well. Look at this. In the past 5 years, they've done terrible against the S&P, down 50.68%. The S&P went up in the past 5 years, 53.29%. So this is, again, certain stocks have been really loading up on, and it's really paying off. And I'll give you another example, which is Regions Financial Corp. It's sitting at 1686. And these guys really haven't done too hot. The dividend yield is 4.74%. The PE ratio is 7.18. Average volume 10.66 million. The market cap is 15.82 billion US dollars. Its year range is 1394 to 2433. So there's a big dip. Day range is 1604 to 1690, and its previous close is 1588. So M1 Finance has been allocating a lot of my dividend income to reinvest in Regions, as well as my money that I throw in. I usually dollar cost average every Monday. I'm actually throwing some money in tomorrow because I'm going to reveal to you the dividend stock that I added in the financial sector, which is known as Truist Financial Corp, sitting at 28.92. Now, when I was live yesterday, somebody mentioned that, and I said, ooh, I'm buying, because look at the dividend yield. It's 7.19%, a PE ratio of 6.44. The average volume, 14.79 million. Market cap is 38.52 billion US dollars. At year range is 2556 to 5222. Its day range is 2770 to 2896. Its previous close is 2717. Now, I'm going to explain to you why I really like these guys and why I bought them. And I did some digging, and I really like the way things look with them. So I'm going on Wikipedia. It makes it 10 times easier. The Truist Financial Corporation is an American bank holding company headquartered in Charlotte, North Carolina. The company was formed in December 2019 as a result of the merger of BB&T, Branch Banking and Trust Company, and SunTrust Banks. Its bank operates 2,781 branches in 15 states and Washington, D.C. It offers consumer and commercial banking, securities brokerage, asset management, mortgage, and insurance products and services. It is on the list of largest banks in the United States by assets. As of June 2021, it is the 10th largest bank with $509 billion in assets. As of January 2021, Truist Insurance Holdings is the 7th largest insurance broker in the world with $2.27 billion in annual revenue. Now, speaking of revenue, I'm going to go over that. And here's their revenue annually in millions US dollars. 2016, 11,000, 2017, 12,000, 2018, 12,996. 2019, 14,664, 2020, 24,427, 2021, 23,064, 2022, 25,356. That's a huge increase in revenue from 2016 to 2022. Now let's go over their dividend history. So I'm going to start with 2019 was 45 cents, and then 2020, and then 2021, was 45 cents. Still, you can blame the pandemic. 2021, it was 48 cents. And then 2022, it cracked 52 cents. It has a low payout ratio according to Zacks at 43%. The number of dividend increases in the last 5 years is 4, and dividend growth in 5 years is 5.98%. If you bought one share, you made 208 with a 7.66% dividend yield. So again, I'm going to have a disclaimer at the end of this video, but these are the sectors and stocks that I really have been targeting. And this is kind of my 1 to 2 year plan, is to load up in these guys. And eventually M1 Finance will say, oh, we can't, this is getting too big. Time to switch things up and distribute the dividends into the other stocks. So this strategy has been working. It has been doing very well on my E-Trade and M1 Finance dividend portfolios. And I like to have two separate ones because I like the one with fractional shares buying other dividend stocks. And then on E-Trade, I'm hoping, in theory, to use these covered call ETFs to buy other covered call ETFs, so that eventually I can use their income to buy individual dividend stocks and really load things up. Also, I can add like covered call ETFs like TSLY, which is now added to M1 Finance, to my dividend portfolio for my end game, because I want to get to the point with M1 Finance. I don't have to put anything else in. I'm just going to have my dividends do the talking and walking and reinvest. And that's kind of my end game scenario. So I'm hoping that these guys, I get enough shares, 200 to 400, in a lot of these financial sector stocks in the long run, and really start turbocharging the dividend portfolio so I can target. Now I consider this a dividend growth stock and like NNN and that. But I want to use that income to turbocharge my dividend portfolio and buy my dividend growth stocks. And that's what I've been doing with my income stocks, high income, high dividend yield stocks like ARC and ORCC, to really just like dominate and start buying these REITs and buy these other dividend growth stocks, and it's been doing very well. And I've been in the past 2 months reaching $700 or so, 700 plus in dividend income. So this aggressive strategy so far has been working. And again, this is not financial advice, for entertainment purposes only. Disclaimer in the description and at the end of this video. But there's also a special on M1 Finance. So you're interested in creating an M1 Finance account, I have my affiliate account at the bottom. We both receive compensation, and I'm pretty sure we both get $100 right now. Click the link if you're interested in create a M1 Finance dividend portfolio, if you're interested in creating a fractional share dividend portfolio. You guys take care and have a good one, and I'm jumping to my disclaimer. This is a disclaimer notice. This is not financial advice, for entertainment purposes only. Disclaimer in the description. Always consult with a financial advisor regarding financial advice. I do not give financial advice. I will tell you I do not give financial advice. There's always a risk regarding investing, and you can lose a lot of money. My channel is for entertainment purposes only, and I reveal to you my dividend investing journey. Do not take this with any form of financial advice in these videos. I hope you enjoy my video, and make sure you subscribe and hit the notification bell so you don't miss future videos. Thank you so much for watching this.